All right, so what I thought we could do, take a look at PowerPoint. I don't usually use PowerPoints, but for these chapters, yeah, it works pretty good. Just tell you what this is anyway. These PowerPoints are out there in Moodle. You guys aware of that? And so are all the solutions to all the homework problems out in Moodle, right? If you have anything that you'd like to look at today in particular, I'd be happy to, or any day. I'd be happy to. I already told you that, didn't I? Show maybe. Unable. What can you do? Oh, no, okay. Don't do that. Unable to do something else. All right, so just, sort of glancing through this stuff. Who was it I saw earlier came in here and wanted to see if they could copy the quiz? Yeah, okay, yeah, good. I already gave you a copy of the quiz. It's the first two chapters. So, everything to the future two chapters might be on the quiz. Maybe most of it is. I don't know. So, anyway, is that a little better for seeing that? Okay. All right, so next exercise. When it gets darker later in the semester, we'll have lights on more, I guess. All right, so the first chapter obviously is about, accounting, capital allocation. What's this capital allocation thing? We determine the discounted present value of every single one of our investments. We decide where we invest. Capital allocation. Constrained resources, we only have so much capital. Everybody only has so much capital. There's only so much capital in the world. You have to decide where you're going to invest it, right? And investing includes investing in other companies, investing in stock, of course. It includes investing in land, building, equipment, inventory, people, anything, right? That's what we mean by capital allocation. Everybody got it? So the major purpose of financial statements that are reporting to people outside the business, financial reporting, right, is for capital allocation decisions. Of course it is. And what do we typically talk about for the capital allocation? Debt equity, right? You can buy bonds, invest in bonds. That's lending people money. You can be a bank and loan people money. Yeah, that's an investment for the bank, of course, right? Okay, from their perspective. So it's both debt and equity. You can certainly buy stock, preferred stock, common stock, anything like that, right? So yeah, sure. Okay, anyway, so the need to develop standards. Well, you know what? People just did accounting. We just did it. And, they needed to keep track of things, so they started keeping track of things. It evolved and it evolved and it evolved. This is kind of different than science as such. This is man-made. We made it up, right? It evolved. But it's based on economics, right? We use it because of economics. Right? Supply, demand, all that stuff. Okay? People needing information to make decisions. Information is of value, so we start collecting information. So the accounting profession develops over time, and they talk about that, right? But we just did it because it kind of worked. And then we did something else because it kind of worked. We did something else because it kind of worked. Different across industries, different across companies. Well, then what happens when they start issuing stock prior to the crash in the late 1920s, early 1930s? What happened? All kinds of people were reporting all kinds of different things. And a lot of people were lying, intentionally probably, and they were swindling other people, right? What happened in the subprime loan deal? Exactly the same thing. What happened with Enron and WorldCom? Exactly the same thing. Every time we have major collapses in our economy, part of it is due to horrible accounting. Maybe intentionally horrible or just horrible. And what's happened is we've evolved in terms of accounting over time as the owners got more separate from the managers, right? I own stock in a whole bunch of different companies. I don't even know which companies they are. It's through mutual funds, right? I don't even know which companies they invest in. Really? I don't know how much of each one I own. They don't know who I am. I don't know who they are. I don't know who the management is. You get the idea? So we're using financial statements to evaluate what people are doing that we might not even know now, right? It's different than when the owner would hire you to do something for them, and they were trusting you with their money, right? And you were doing something for them, and they could directly work with you. You could still steal from them, but at least they know who stole from them. Now it's kind of a mess, isn't it? Right? So financial reporting is really critical. Without financial reporting, we don't have an economy. It collapses. Because there'd be no information. No information, guess what? No trust. What happens every time there's a major scandal? Trust goes way down. Right? People don't believe anymore. And it's irrational lack of trust. You see what's going on with the market right now the last few days, right? The last couple of weeks. Makes absolutely no sense. There is absolutely no sense to it. There's no reason for the market to be bouncing all around. None. But people's impressions. whether or not they trust, right? What they think, what they feel. It's not all that rational necessarily. Okay? Yeah. Okay, so that's nice. How many times have you seen this message in your life? Yeah, okay, anyway, no, at least. Okay, I still need it at home. All right, so that's where the Securities and Exchange Commission came from, right? Two Securities Acts. That's from the crash, right? Stock market crash. Okay? The real one, right? The depression. What's the first act do? Two acts. What years are they? Two Securities Acts. In auditing, we'll beat this to death. But there's two Securities Acts. SEC was created by the first one, Securities and Exchange Commission. What's that? No, Sarbanes-Oxley is much more recent. That was a WorldCom fiasco. WorldCom and Enron and all those guys. When Arthur Andersen ceased to exist, right? That fiasco. It's Sarbanes-Oxley. But what's the deal with this one? The first one on the list here. Up to that point, we had what? The Accounting Review Board, right? Which turned out what? ARBs. It's really convenient, right? ARBs, the Accounting Research Bulletins. Okay? So what's that going to be? What is that thing? What's that? That's GAAP up to when? You got to have these years. When did this happen, guys? Over the years. So did you read chapter 1? Okay, that's the second one. That's the APBs. What's before that? Up through then when? Basically 1934. Really, right up to the APB, right? Okay, I said that one. It's the Committee on Accounting Procedures, CAP. No wonder you look at this so strange if you haven't read it, okay? It's the CAP at that point, turning out accounting research bulletins, right? Okay? Right? That was GAAP. And who was that? That was the profession. That was us, right? That was us, creating a lot of academics, really, at that point, right? Creating generally accepted accounting principles, just documenting what everybody's doing in here, right? Okay? Got the idea? You didn't know that exists. You know basically the time span. It's right up through the crash, huh? Then the SEC is created in the Securities Act, right? What are they? 1933 and 34. Okay? What happens? SEC is created in the first one, right? And if you're going to do an initial public offering of securities, when you do your initial public offering of securities, you have to have disclosures required, right? A lot of disclosures started at that point. But you know what? Then they realized the very next year that wouldn't it be nice if people who were investing in stocks got some continuing information, like an annual report, which is going to be called what? 10K. You got to know what a 10K is. That's a corporation's annual report. Did you read this carefully enough, you guys, or not? A little bit in principles, wasn't it? But it's really in depth here. There's a lot of information there. Know it. Okay, so yeah, they created the Securities Exchange Commission, and then the very next year came out with annual reports, 10Ks, and also 10Qs, quarterly reports. They're required in any publicly listed company on any U.S. stock exchange. In other words, they do business across state lines, right? That's basically it, okay, which is all big companies, right? And lots of smaller ones. Everybody got the idea? You should know this stuff. Okay, then things go along pretty good for a long time, huh? Right? The APB at this point. Also, about the same time, the profession creates the Accounting Principles Board, right? And they turn out APB opinions. What period of time was that for? 1939 to what? 59. Okay? So you got a 20-year span in there. Where are you guys' books? Oh my God. Whatever. Okay. Yeah. Do whatever you want. I know it's a big, heavy book. It's so hard to carry. Then get it electronic and carry it. I don't care. Or get this one. You can take a chapter out at a time. Right? Comes loosely too. There you go. Wow. That's unbelievable. Okay. What if I give you a quiz and I say, oh, you can use your book, and you don't have yours? You're deadbeat. You're just not bothering. What do you think I was going to talk about today? It's all theory. What are we going to do other days? Probably work problems? You guys professionals or a bunch of college kids? What are you? The ones without a book sitting in front of them, I'd say a college kid. The ones who've actually read the book and they got so many, let me look around at these books. You got an awful lot of yellow in your book. You could ever go back and read all that stuff?
This wasn't me.
Oh, it wasn't you. Oh, well, he bought one from somebody who was serious. I take it back. And if you got their book full of yellow, but some of you do, or whatever color you use, that one's pink. Is that you? Did you do that with pink?
I did.
Good man. Okay, I like pink. Good color. Okay? All right? So, yeah, I don't care if you're marking your book or not. Are you going to sell these books back? Only if you're insane. It's kind of the Bible. You didn't know everything in this book. Everything. Well, the whole book, not just the part I got here. I just got the chapters I've got. The rest are in the house. So you have those. Okay? Yeah, you can read that book cover to cover and know everything in it. Yeah. You got a young woman. Oh, I can't remember. Ashley something. They were twins. The two of them. Oh, it was Ashley. Anyway, she had 98 on the auditing section exam, and she got 95 on the financial section exam. She studied way too much, didn't she? Got a job at a big four firm, and she goes to work. Right? She's starting the MBA, or finishing the MBA. I don't know what she's doing. Maybe she's finishing the MBA. She's taking profit, and she's going to be starting work right away, real soon. What's she going to be able to tell partners when she walks in? And they say, you know, what's your plan for taking the CPA exam? What's she going to say? I passed it. Of course. What do you want to say when you go to work? Oh yeah, I'm going to take the next year and study for it. You know, I'm supposed to be working for you. I'll work for you, and then in the evenings I'll study for the exam because I was a dumb shit who didn't do it when I was in college. That's what you're really saying. Because you might be talking to somebody like me who passed it, right? Right away. And you want to, how long do you want to study for the CPA exam? How about 0 minutes, 0 hours, 0 seconds? You're looking at somebody who didn't study at all for the CPA exam. And you know I'm not very intelligent, right? I did study for the CPA exam. You know when I did it? When I was sitting there. Why do it later when you can do it now? I never want to have to work. I just want the money and the fun. Right? I'm doing it. I don't want to have to do the work. What if you already know it when you go to work and you don't have to study for it? Very nice. So come on. You guys haven't even started yet. I can tell. Don't even book. Okay. So, all right. Well, fine. The American Institute of Certified Public Accountants is us. Financial Accounting Standards Board. When did that one show up? Oh, we said the APB did a whole bunch of opinions, right? And then everybody decided what? There were too many of them. It's hilarious now with the FASB. There's a lot of them now, right? The FASB's cranked them out, huh? How long has the FASB been around?
73.
Yeah. Okay, so what happens? The APB goes, right, for a period of time, and then what? We started having a bunch of scandals. Another problem in the economy. And the accountants get blamed, and we do have some of the blame, right? Not all of it, of course. We're not the ones who stole it. We're just the ones who didn't report what people were doing. Probably the 12s who could have. Right? That's true. Okay, that's true. Anyway, so we got the Financial Accounting Standards Board, the FASB, established. Do you know what the procedures are for coming out with the new FASB? There's an essay question for you. You want to know what's on the test? Or the quiz? I bet I put that one on there. I haven't written it yet, so I'll do it tomorrow. I bet I'm going to put that on there. You know why I'm going to do that? Because I don't think any of you know it. That's what I'm going to try to guess. Whatever I think you're going to miss, I'm going to put there, okay? That's what they do on the CPA exam, too. So how do you beat them? How do you beat me? Know everything. Do you know what the procedure is for coming up with a new FASB? Okay? Do you? Anybody know what page it's on? I don't know what page it's on. What do they talk about doing a new FASB? Page 11?
It's like a due process.
Oh, it's in 1. Yeah, just 1 is chapter 2. Yeah, it's 11. Yeah, due process. That's the new board, right? It's the FASB. Okay? So, yeah. What's the process? Where would you find the answer to that essay question? Anybody see it? How do we do it? What's the process of coming up with a new FASB? What do they say on page 11? Actually, it's on page 12 in the box. It is on page 11, of course. It's there. But on page 12, there's the box. What if you can talk about everything that's in that box? You'd have it made. Topics get identified and placed on the board's agenda. Research and analysis conducted during the preliminary reviews phase, right? Pros and cons issues.
public hearings are held, right? There are hearings, okay? Then an exposure draft is released. And then they get a whole bunch of additional inputs on what people think about the exposure draft. And then the board votes, and if the board votes in favor of it, right,
It's a new standard. That's where FASB's come from. By the way, it's a smaller group of people than the APB was, so they can get them, they're more efficient at getting work done, but guess what? You end up with more FASBs, don't you, over time. Everybody got the idea? FASB's still around, okay? So, could you answer that question? Could you now? Oh, maybe, right? You'd answer well if you studied how this stuff, right? Before Monday. You have all kinds of time before Monday. How many hours can you give me before Monday? How many hours are there before class on Monday? What's today? Wednesday. It's almost a week. 24 hours a day. Give me a break. You guys can know everything in these 2 chapters that I suggest you do. Oh, that's right. You get to throw away a quiz. This could be the one. Not a recommended strategy. The other ones are much tougher than this one. This one is obvious. You just know everything in the 2 chapters and tell me. Okay? All right. So there's an idea for an essay. That could be a really cool essay, don't you think? All right. Wonderful. You guys are scary people. All right. Anyway. And then we got this codification. That's really cool. You know what is nice about the well, it's not very high tech, but the codification is really nice. If an ARB, an Accounting Research Bulletin, right, put out by the Committee on Accounting Procedure, CAP, right, if that has not been superseded by an APB or a FASB, it's still in effect. Everybody got it? So that's part of the gap, right? Part of the gap. It's been superseded. It's gone. Okay? All the APBs that have not been superseded, guess what? There's no gap, right? All the FASBs that have not been superseded, a lot of have. We change things as time goes on, right? Counting evolves, okay? Political process. We talked about in the chapter, right? You guys have read these chapters, right? You're doing that, at least, I hope. Okay, dig in. I want you to know what's in the chapter, not just read it. Okay, anyway, so yes, this political stuff over here, you know, political environment, expectations gap. Anyway, all this stuff is still out there. And those are the main things that are gap. But anything anybody does is really gap, as long as it's generally accepted, right? Okay, but if it's codified, of course, written down. Of course, that takes precedent. What they've done is they put together a searchable document that includes all the gaps. Isn't that nice? You guys know how to go out on the internet and search for stuff, right? This sort of works, not as well. But it sort of works. You can go out there and you can do word searches, right? You can do topical searches, you can find stuff. It used to be a real pain. You just search around and look all over the place. It was all cross-referenced, right, among all these different documents. It's all in place now. Really nice. That's the codification. So fine. Okay? And we have access to that here. You'll be using it in Accounting 313 with Richard Schrader. And on the CPA exam, they'll ask you to actually go research some topic, right? And they'll give you access to what you can be able to research. And he'll have you practice doing that in 313. Really useful for the CPA exam. So anyway, that's what that's about. Yeah, it's a political environment. What do I mean it's a political environment? Who puts these things on the agenda? Oh, accountants see a need, CPAs. Businesses see a need, politicians see a need, government regulators see a need, and we start talking about, hey, maybe we should be doing this differently, right? Or maybe we should be doing something all the same and everybody's doing it a whole bunch of different ways. Or there are new transactions, derivatives, start developing. Leases at one point start developing. They change tax law. All kinds of stuff happens. International financial reporting standards they mentioned in the chapter, right? The rest of the world is doing accounting different than us. So we have this convergence process that we're working on, trying to make U.S. GAAP match with the rest of the world. We got the biggest economy still, slightly, okay? Slightly bigger economy. Certainly not a bigger economy than the whole rest of the world put together, right? Not even close, right? But we still are a major driving force in the worldwide economy, right? It's true, okay? So, but we like to do everything the way we like to do it, don't we? We want to tell everybody else on earth what to do. Guess what? They don't do that anymore. Because they're rich too. Okay? Right after World War II, we were pretty big at that. Telling everybody what to do everywhere. Well, no more. We don't get to do that. Okay, the rest of the world kind of tells us to do once in a while. You know why we're accepting international financial reporting standards at U.S. stock exchanges, the New York and American Stock Exchange? You know why we do? Because companies threaten to delist on our stock exchanges and move to Europe and sell their stock there. And our stock exchanges went crazy. The people that run them, they're like, no, we have to accept IFRS, International Financial Reporting Standards. So guess what? Now a company can do IFRS or US GAAP, whichever one they want, or both. We're still forcing companies to do both. If they're trying to raise money from people that are US citizens, do they have to follow our GAAP? Yeah, pretty much, right? But they want it in that, right, form. What do people want in the rest of the world? IFRS. So major corporations have to do both. You think they like that? Costs them money. Not particularly. It's good for accountants, though, because you know both of them can make a lot of money. Well, what we're doing is we're eliminating all the differences gradually. One of the major differences is, though, we allow LIFO inventory. You guys know about LIFO, right? It's ridiculous. Last in, first out. Which ones are you supposed to still have? The old ones, the first one you bought. You're a dairy. You've been in business for 100 years, so you have 100-year-old milk, right? Sitting on your shelves. Because you do last in, first out. No, you don't. You do first in, first out. Manually handling the inventory, right? To the extent possible, everybody does first in, first out, don't they? But we pretend that we're using LIFO, don't we? For financial statement purposes. Why? Because our tax code requires us to pretend we are for financial statement purposes. Don't write on the CPA exam that we pretend we are. Don't do that. Write down what the authors say, right? Because they're saying it right. LIFO makes the income statement better, cost of goods sold and more recent costs, better estimate, screws up the balance sheet lower, right? FIFO makes the balance sheet better, but it screws up the income statement. It's true. Okay, that is true. Okay, but the reason we do it is because Congress, in their infinite wisdom, a bunch of lawyers, right? They decided you had to use the same method for tax and book purposes. Are we going to let France tell us what our tax code's going to say? No. Not with our Congress. There's no way in the world. One of the reasons we have not adopted IFRS is we can't resolve this LIFO thing because they think we're crazy. And you know what? Who's right? Should we be using LIFO for financial statement purposes or not? Of course not. It's ridiculous. Nobody handles their inventory that way. Right? So we should not be. They're right. We're wrong. But we refuse to change. No, we can't change. It's illegal for us to change. Got it? So this is a political process. Is that enough on the politics of it? Imagine all the pressure. Imagine when the oil and gas industry doesn't like an accounting pronouncement. What happens? They go to the FCC and say, hey, we don't like that one. Kill it. You know what the FCC typically does? They kill it. Oh, wow. A little different than the author implies, huh? That's what they mean by political process. It's happening. The APB put out oil and gas accounting. It really made a lot of sense a number of years ago. The industry just went berserk. They were all going to be bankrupt because of how we were accounting for things. How can you go bankrupt because of how you account for stuff? Give me a break, right? But they were, right? They would all go broke. So they talked to their congressmen and all that stuff, right? And they talked to the president, and they threatened to fire the head of the SEC. By the way, where does the money for the SEC come from? Congress. Who appoints the commissioner for the SEC? The president. Subject to whose approval? Congress. What if Congress doesn't like what the head of the SEC is doing? They just remove them. First they take their money away, then they remove them. Got it? We've had a number of situations you'll learn about as we go along this program. Arthur Levitt, a former head of the SEC, says the biggest mistake he ever made in his career was not resigning over what Enron wanted to do. He gave in. And he gave into our profession. We were supporting what Enron wanted to do, the profession. Arthur Anderson wasn't, though. They were against it. But then they said, well, okay, it's fine if you want to do it. Because everybody else says it's okay. Now Arthur Anderson's the one that doesn't exist. It's funny, isn't it? Ironic. Okay, so political process, you guys. Political process. Read this stuff, take it seriously. What's the expectations gap? Everybody out there thinks we're telling the truth in financial statements. What do we think? They're wild-ass guesses. You tell me, when you sell something on account, and you set up an allowance for doubtful accounts, do you think that's really how much you're going to collect? The total accounts receivable less the allowance for doubtful accounts? That's how much you're going to collect, right? Of course not. It's an estimate, isn't it? You think Yum Brands even knows how much cash they have? Let's see, Papa John's, KFC, Pizza Hut, A&W, what's the other one? No, Pizza Hut. Pizza Hut, wrong. Pizza Hut, not Papa John's. No, nobody owns Papa John's. I'm sorry, John. Okay, anyway, wrong one. Yeah, well, their pizzas taste the same anyway. They're both god-awful. Have you guys ever had a good pizza? Been to Zaz? Right? Well, go to Zaz. Decent beer, too. Right? Get their infinite number of cheese pizzas, whatever it is, 5 or 7 or something, different flavors of cheese that they put on different types. Oh God, it's a heart attack waiting to happen. Just all cholesterol, 99% cholesterol, really great stuff. So anyway, I just dream about it now. I don't really eat that stuff anymore. My wife has me eat pizza that doesn't have cheese on it. Yeah, yeah, soy. So, no, actually, it tastes good. It's not as good. Anyway, yeah, it's pizza. But anyway, how much cash do they have in cash registers all over the world? Do they know how much it is in total? Of course not. It's an estimate. But what's the deal, you guys? Goodwill. What's that worth, right? What do people think that are out there? That you're telling the exact truth. This is factual. Financial statements are historical truth. No, they're not. Bull. So the expectations gap, especially when you get into auditing, they think that we looked at every single number in the financial statements. What am I going to, at McDonald's, I'm going to stand next to every single kid that's pushing the buttons and make sure they do it right? How could I possibly audit every single number in the financial statements? It's impossible. You couldn't do it. The audit would cost more than do it in the first place. We do it on a test basis, a very limited test basis. Wait for your audit. You're not going to believe how little we look at. There'll be 100 million transactions when we look at 40 and test the controls, and then draw inferences using statistics. Is your stat class important to you guys? Oh God, yes. That's it. Understand sampling to the extent you can actually learn something there. Okay? Try to get it done. Anyway, so good. All right, I talked about international, I guess, all kinds of challenges. By the way, there's a whole bunch of, and ethics is everywhere. It's just everywhere. Think about this, you're doing a whole bunch of estimates, and then your boss would like to have a little more income, and you're estimating inventory, and you're estimating allowance for doubtful accounts, and you're estimating the warranty liability and all that stuff. Could you just change those estimates a little bit and improve net income? Yes. Will you? No. And here's what you do. Here's what you tell your boss. You will, in the course of your career, guarantee, whether you're in public accounting or corporate accounting or financial vice president or whatever, wherever you're at, people are going to be encouraging you to make things look better than they really are. What they'll say is, it can't be that bad. We couldn't have lost that much money. Or we had to make more because we didn't meet our earnings projection, right? You estimated you were going to have $1.25 per share earnings, and you're at $1.24. Come on, find me another penny, right? What do you mean, find me another penny? What does that even mean? How do you find another penny? I made the very best estimates I could, right? And this is what it is. I think it's what the income is, you know? I think it's what the balance sheet is, assets, liabilities, equity. I think it's what it is. That's my best estimate. So what I would suggest is you just tell them, well, no, you have to tell me what number's wrong. And they'll say, no, you're the accountant. You have to figure out what's wrong. I'm not an accountant. I'm a marketing person, right? I'm the CEO, right? I'm from human resources. I know you accountants just do all kinds of stuff. I think you're wrong. You got something wrong. I don't know what it is, but something's wrong. You have more income than that. Here's the danger. What you might do, and I've had clients do this when I work in public accounting. You can go out and do a selective search. What if you think revenues aren't high enough? What are you tempted to look for? How about revenues that are underreported? Revenues that haven't been recorded yet? If there are millions of transactions, will you find some that were not recorded properly? They weren't high enough? Or they weren't recorded at all? Of course you will. There are millions of them. And then on the expense side, what would you do? You look for things that were recorded this period that should have been next period, right? So they're overstated this period. So you go search for, selective search, right? You search for stuff that's recorded that shouldn't have been this year. Will you find it? For expenses to try? Sure. And both of those will make your net income more, won't they? What have you just done? Unintentionally, I hope, hopefully not intentionally, but unintentionally misstated your financial statements. Why? Did you look for any revenues that were overstated? No, your boss didn't want that. They wanted you to find the stuff that wasn't there, not the stuff that's there that shouldn't have been there. But if you're going to look for stuff that isn't there, should you look for things that are there that should not be there? Where they've over-recorded the revenues? You bet, and take it out, shouldn't you? What about the expense side? If you look for expenses that are too high, should you also look for the ones that are too low? Of course. And what's going to happen probabilistically if you have 100 million transactions? You're going to find them both ways, aren't you? And what's most likely going to happen if your estimates were good in the first place? Net income will not change. So what I'd suggest to my clients is we can look at every single thing, every transaction you did all year if you want. The loss is going to get a lot bigger when you put it out of people. Because it's going to be 10 times or 20 times or 100 times or 1,000 times what it is now. With your boss, here's what you tell them. We do not want to lie in our financial statements. Here's the deal. You have $100,000. You buy our stock. and we lie to you about what we did with your money. What do you want?
I want my money back.
Want my money back. Now what happens to your stock price if the market finds out you were lying in your financial statements? Bottom falls out. Small company, what happens if the banker finds out you're lying in your financial statements? Cancel your loans. They call them off as soon as they can. They get rid of you. They're not going to loan you another dime. That's the argument, just like that. We're going to tell the truth. It's bad enough, you guys, if we make a mistake. What if you make a mistake and overstate your income? And then you have to restate it the next year. What does the market think? They might have made a mistake, but they might have lied to us. Might have been intentional. And it's just stuck. After the Enron, WorldCom, all that stuff, all those fiascos around the year 2000, right? All that stuff going on. After all of those, a whole bunch of companies restated their financial statements because they were all real aggressive. What's aggressive accounting mean? I know what an aggressive football or basketball play is, but I really don't know what aggressive accounting means. You only lie a little? What's aggressive accounting? Oh, I met the letter of the generally accepted accounting principle, but not its intent. What are we, a bunch of lawyers? Do you want to have fair disclosure in the financial statements, or do you want to make it look as good as possible? If you want to make it look as good as possible, please go to marketing, because they're making things look good. Have you ever seen, and I don't mean that as a criticism, they're advocates. We are not, we're independent. Even if you work inside the company, you're supposed to maintain your objectivity. If you're an outside CPA, you are indeed even independent, right? I am not going to let you lie in your financial statements be associated with it. Even if I work for you, I won't do that. I've been fired from clients before because I wouldn't do that. I've been with CPA firms where they fired us because of me. I'm a horrible person. And it costs us money, and you just walk from it. I've left jobs before because of it. Right? I'm not doing that. I won't do it. How would you like to have been vice president of finance at Enron, and then when the bottom falls out, you get to go to jail with the CEO? And you know what? You should go to jail with the CEO because you did it. Down the train, too. And even if you don't go to jail, I know people who have made millions and got to keep it and they sold it. Oh well, life's like that. I'm an agnostic, I told you guys that. This is when I really wish I was religious because I want there to be a hell because I know they go there. So I'm hoping, you Christians and other religions are right about that, right? That there's a hell for those folks. Because otherwise they get away with it. So they're really good while they're alive. Although, I don't know. If you think that if you think you wouldn't want your grandma to know, you guys love your grandma? Is there anybody on earth that doesn't love their grandma, right? Okay, so think of your grandmas. If there's anything you ever do that you wouldn't want your grandma to know, other than getting drunk and stuff. Serious money things, right? If there's anything you do that you wouldn't want your grandma to know, my suggestion is don't do it. So do the gut test. It makes you sick. I'm sick going to work. You're doing something wrong. You're doing something wrong. Someone's pressuring. Anytime somebody is very, very busy, they don't have time to explain to you. Forget about it. Anytime they tell you you're stupid and they're smart, politicians, red flag, right? I know all the answers, bullshit. You don't do that. Nobody does. Right? You couldn't possibly understand. I'm the dumbest person on earth when I worked as an auditor. Somebody would say, the manager would say, well, I just can't explain it to you. Well, you have to. And then they try. I say, I still don't understand. I'm really sorry. I just can't understand. Would you explain it to me again? And again, and again, and again. And it's a fraudulent situation where you get really, really mad. Because they're just trying to get rid of you. And you won't leave. Because you're stupid. No, what the hell? I'm stupid. Explain it to me. Come on. Explain it to me. Explain it to me. Take some guts. Take some courage. Would you quit your job because your boss wanted you to misstate financial statements? The answer has to be yes. Hell yes. I'm out of here. You don't want to go down with them anyway. But beyond that, you don't want to go to hell. There you go. That's your sermon for today from the agnostic. Okay, anyway, so, all right. Ethics is everywhere. It just permeates everything. If you guys, you're going to have take-home exams and you're not going to cheat, right? You're not going to look at your book. You will completely study all the material before you look at the exam because otherwise you'll direct your studying and that would be cheating. You will have a 3-hour time limit. You're going to want to quit anyway, trust me, right? You won't be done and you quit after 3 hours. Will you do it? Of course you will. Why? Because you have integrity. Right? You enjoy this profession. I think everybody in the business community ought to be like that. They're not. Everybody in the accounting profession is not like that. But everybody here is, right? Absolutely. If you will steal 1 point on 1 quiz this semester, you will certainly take $1 million prize. What a no-brainer that is, right? You've heard all the old jokes, about establishing your prize strike. Okay, but it's really true, right? So somebody tell me then, what's the objective financial report? By the way, have you noticed that we could probably talk about any of this stuff for 1 million years? No, we know. Okay, capital allocation, yeah, wonderful. Oh, by the way, I should have said this before. These are cool. Are you reading all these boxes really carefully? That's the entertaining part. That's the neat part, right? Where you really get the points the author's trying to make. Read everything. Read everything on every page. Read the notes at the bottom of the page too. And if they're not something that's really all that enlightening, read it and move on. If there's something that's really interesting, which a lot of them are, read it and think about it. Got it? Okay? But certainly always read inside the box. So, this one, it's the accounting. That's why what many investors seem to be saying these days, even the slightest hint of any accounting irregularity leads to a subsequent pounding of the company's stock price. That's the point I just made, huh? Don't lie. Don't make it look better than it really is. By the way, there are different methods you can use, right? Some might make you look better than others. Different types of gap, different alternative gap, that you can use. Should you pick and choose which gap you use to make yourself look better, or should you pick the one that reflects economic reality the best? Go for economic reality. Is your job to make net income be as much as possible? Equity be as much as possible, or is your job to tell the truth? Tell the truth. Good. It is, but you don't know what the truth is. You're asking me. Got it? That's why it's a profession. Right? In your judgment, it's the truth. Right? Make sure you're not biased. Is that hard when you're working someplace that's supporting you and your family? You're accumulating wealth doing it? Is it hard to maintain your objectivity? Yeah. Is it hard if it's your largest client, Arthur Andersen's Houston office? Enron was by far their biggest client. It was one of the biggest companies in the world theoretically. It never was. It was all a fraud. It was a real small company in the oil business. But it looked big. They were borrowing all kinds of money and getting people to invest a whole bunch of money, which they were effectively just stealing, right? And then they were losing it, right? And paying it to themselves in salaries and stuff. So did Arthur Andersen want to blow the whistle on them? Not the partner in charge of the engagement, that's for sure. He had to know. He had to know. So did all the managers working in engagement. Had to know. By the way, do you think the partners in Arthur Andersen here in town, who now work for UI, by the way, or have retired since then, right? Do you think they knew? Of course not. Not at all. Did it cost them a fortune? Yeah. Yeah, they lost their partnership share when Arthur Andersen went down. Integrity is important, guys. For a lot of reasons. Okay. So could you give me this definition? Somebody give me the definition. Objective financial report. This is probably going to be, I just can't imagine. I might not have you write the definition, I might need multiple choice questions to do it, but it's still going to be there. On page 5, and then later in chapter 2, what's the objective financial report?
Provide financial information about the report.
That's it, man. The objective of general purpose financial reporting is to, I'm on page 5, to provide financial information about the reporting entity that is used for the present, potential equity investors, lenders, and other creditors in decisions about providing resources to the entity, right? Either loaning money to them or investing in it, we could say, right? Yeah, but it's investors and creditors, so that's what it is. Right, guys? Who uses financial statements? Everybody. The government, employees, unions, competitors, right? That's why you're careful how much you put in the statement. You only put in what you have to. And that's okay, as long as you follow generally accepted accounting principles. I don't have to give my competitors proprietary information. I'm giving people information to invest in the company, decide to loan me money, right? If you want to buy 100% of my stock, then I'll tell you everything, right? You can now get that. But if you only want one share, you get the financial statements. Make sense? Okay? What's in it for me, kind of, but it's true. Okay? And the same thing with borrowing money. If you want to borrow money in your small business, I bet you tell the banker whatever they want to know, huh? If you're a real big business and you're issuing bonds, you don't tell the bondholders everything they need to know, or not. You tell them everything they need to know, that's that, right? But you don't tell them anything beyond generally accepted accounting principles, because you don't have to. They can buy the bond or not, it's up to them. So you don't have to give your competitors and your vendors and your union every piece of information you have in the business, right? It's not full disclosure in that sense, it's full disclosure within generally accepted accounting principles, okay? Yeah. So, and by the way, what are they going to use this information for? To determine what the future cash flows are, determine what the risk level is, determine when the future cash flows are going to happen, and discount them back to now. You know what a share of stock worth? The discounted present value of everything you're going to ever get out of it, forever. Really? But you're not going to own it forever. It doesn't matter. When I buy a share of stock, I'm buying all the dividends and all the increase in market value, right, the gain. I'm buying forever everything that it's going to generate in terms of cash flows, right? All discounted back to now. And then when I sell it to you 10 years from now, you pay me for forever from then, right? So what I get to keep is the 10 years, okay? But remember this, say at a 12% discount rate, what are cash flows worth 100 years from now? Oh, nothing. Almost nothing is pennies, right? On the dollar, not even that. I mean, portions of pennies. How about 20 years from now? It's pennies on the dollar, right? So which years do you have to really guess pretty well? Next year is real important. The year after that's real important. Each year becomes less and less important. You can look at a present value table and see that, can't you? At 12%, $1 a year from now is worth what? 88 cents? I don't know, something like that. Okay, right, guys? 89 cents. Okay, and then the next year is only worth 70 some cents, and then 60 some cents. Getting the idea? So you get out very many years, it doesn't matter. So our estimates don't have to be forever. Okay, but yeah, that's what we're doing. And I did that last time, didn't I? Okay, so good. So, by the way, any time in this book that something is in boldface, or in blue, or in red, or in anything, highlighting it, what do you think you should do? Know what it is. What's the idea of general purpose financial statements? Everybody uses the same statements, right? These aren't special purpose financial statements. Everybody uses the same one. GAAP is GAAP, okay? Could be differences among industries, but within the industry they still have the same GAAP, okay? So general purpose financial statements, that's the idea. Okay, everybody uses the same set of financial statements, basically, that's the idea. What's the entity perspective? The entity is separate from the business, is separate from the owners, that's all it is. Okay? So you're accounting for the entity separate from its owners. That's true if it's a sole proprietorship, one owner, right? We keep it separate. It's true if it's a partnership, we keep the partner's business separate from the partnership itself, and it's certainly true if it's a corporation, right? Okay, you keep the shareholders' business separate from what the business does itself. The business is a separate legal entity. I know our Congress, no, it's our Supreme Court, thinks that corporations are people. I disagree. I think the corporations are formed by people and controlled by people, and people work there. I don't think they're people, but anyway, in the United States, yes, they're people. At least we're making political contributions, right? They're people. So they have to follow the law. Okay, or they don't have a law applied to them separately than people do. Okay, we talked about the SEC a little bit. Oh, who has the responsibility for doing generally accepted accounting principles, and who has the right to do it? How does that work? Who has the right to write a generally accepted accounting principle anytime they feel like it and impose it upon the business community? Who has the right to do that? The SEC. Do they do that? Of course not. The SEC has almost no funding. We already mentioned that, didn't we? And anytime they try to do too much, their funding gets reduced. They don't have anywhere near enough people to possibly keep track of what's going on in our economy. There's no way in the world they can track all the businesses they're responsible for. It's hundreds of businesses per person, maybe thousands. Got the idea? Ridiculous, impossible. Who does it for them? The accounting profession does. The FASB comes up with generally accepted accounting principles, and the auditing profession, us, CPAs, right? We do the auditing, right? And then the audited financial statements are submitted to the SEC, right? But really, we have the responsibility as a profession for that financial reporting also. So they have the right to do it. We typically do it, right? They want us to. Again, what if we write a FASB they don't like? They'll pressure us to get rid of it, right? If we refuse to get rid of it, they can do a county series release and supersede our FASB. So they can pressure us and we'll do it, or they can just replace ours. Got the idea? You know where the power is then. Who has the money though? asking you. Why? Because the profession supports it, and the profession makes a lot of money. And we support it because we want cap, including what you're doing stuff the accounting principles are. Okay, somebody mentioned Sarbanes-Oxley, that's great. Sarbanes-Oxley was what? It's a senator and a U.S. representative, right? U.S. senator and a U.S. representative. They got together and they passed a law to regulate the accounting profession because of, and also regulate investments more, right? Why? Because of the fiascos with Arthur Anderson, Enron, WorldCom, all of those, right? You'll learn about that stuff as we go, right? And then you read about a little bit in here, okay? What does that do? That created what? An organization named what? The abbreviation sort of says peekaboo, but it doesn't really, that's not direct. They hate to be called that, so don't call it that. Around the people who work there, because they're very powerful, right? Very powerful relative to your company, relative to your CPA firm, right? Okay, Public Company Accounting Oversight Board. That's a quasi-independent, quasi-government organization. What do? They write generally accepted auditing standards. What we, as a profession, the auditors follow. We used to write our own. After Sarbanes-Oxley, this organization writes. Who are the members of Public Company Accounting Oversight Board? Accountants, right? Usually retired partners from major CPA firms who don't care about their firm anymore, and they don't have a vested interest anymore, so they're truly independent is the idea. What this organization does is they audit CPA firms. It used to be, we'd have peer reviews, one CPA firm would audit another CPA firm's work, look at the other CPA firm's work. So your Pricewaterhouse, EY, and you look at each other's work. What do you think? Sort of. Right, sort of like, you look at it, but then yeah, everything's probably okay. It's different. You got these independent people looking at stuff, and if you screw up, they can take away your license, right? They can fine you. They can prohibit you from practicing for a while, all kinds of things can go wrong. Okay, so has this improved practice? Yeah, probably. Okay, probably a good idea. Where does their money come from? Corporations who are audited must pay fees to the Public Company Accounting Oversight Board, and so far, Congress has not changed the law. The law says the government cannot spend it for anything else. It has to be spent on that purpose. Isn't that cool? But it's the federal government, you guys. Will that last? Or will they take all their money away too? I hope they never do, because the same kind of works, okay? There were also some real inefficiencies in it. We'll talk about that in not, okay? There are good things with that. Okay, good. So it's SEC oversight. We talked about due process a little bit, didn't we? And we could go on and on forever. CAP. Oh, and here's a good question on page 10. How about on page 10? What's that thing? Oh, did you guys give me all of that? I think you did. Provide financial information by reporting it is useful to present potential equity investors, lenders, and other creditors to make decisions in a capacity. Yeah, well, a little more than that would be a good idea, huh? Use more of the definition they have in there. Okay, wide variety of users. We talked about general purpose, equity, yeah. Primary user group, but a lot of people use it. Oh, yeah, entity perspective, we mentioned decision usefulness. I should mention that. Decision usefulness. Everything is about, is it useful for making decisions? Decision is about what? Capital allocation, which means predicting future cash flows and discounting them back over and over, right? Even the same twice, okay? We do the same twice. Okay? So anyway, you know what assets are? Probable future economic benefit obtained or controlled by an entity as a result of past transactions or events, right? You guys know that? You're good, right? Money. Okay. Future economic benefit, what do you think that is? Cash flow. Cash flow. Probable future economic benefit. What do you think it is? You know what the probable future economic benefit of me bullshitting with you guys is? They're going to put a check in my bank, my wife's bank account, right? So she has it to spend on stuff. Start a pot. I think that happens. I'm not sure. I've never seen evidence of it, but it does. Right? I have good bird. I don't know if she's brought home. She pays me on. Yeah. So, okay. Anyway. Yeah. And she's beautiful and sweet. Okay, so. All right, anyway. Yeah, don't forget stewardship. We talked about that. Probably. Need to develop standards. Sure. Oh, by the way, did you see those elements things are the financial statements? Assets, liabilities, equity, revenue, expense. It's financial statements, isn't it? Balance sheet and income statement. Sure it is. Okay, GAAP. Know what that is. Okay. Three organizations we talked about, didn't we? Wonderful. Okay. Act of 33, 34, I already talked about. We're doing great. Okay. TAP, we talked about. Accounting Principles Board. 39 to 59. Okay. 51. There we go. 51 accounting research bulletins. And then they summarize them all together into one. Okay. When they got rid of it. Problem by problem approach. It failed. That's wrong. They all failed. Okay. That's mean. They were doing a good job trying to put something together. 1959 to 73, there were 31 APBs. Weed Committee recommendations adopted in 73. There were a bunch of scandals. The saving and loan fiasco happened in the 70s. That's what that's about, right? There are a whole bunch of scandals. And every time there are a lot of scandals in the economy, we seem to get accounting changes. All right, anyway, so then there's FASB after that. The Financial Accounting Foundation is appointed, and then they elect the members of the FASB, and then there's an advisory council. It's good enough to just know that. So the Financial Accounting Foundation select the members, fund their activities, exercise general oversight. The Standards Board really does it. Their mission is to establish and improve standards to report. Okay, great. And then the advisory council consults with the FASB on major issues. That's good enough to know. Okay, this is what I was going to get to. On page 10, is it? It's right there. This is an answer to an essay. And lots of times on the CPA exam, this is an essay. By the way, the essays I'm going to give you are stuff that's going to be on the CPA exam, but I'm guessing are going to be. It's closed exam now. So we don't exactly know what they're putting on there, but pretty good guess of this stuff, right? And they used to put this on all the time, so I don't know why it changed. Okay, what's the big advantage of the FASB over the APB? And these are advantages. Smaller membership. Easier to get everybody together and make a decision, huh? Also, how many are there, by the way? FASB members. 7. How many does it take to pass FASB? 4. 4 people agreeing, okay? And they're rotating. Memberships rotated, and they're highly qualified people, of course. Okay, and they get all kinds of inputs from everybody. Lots of lobbying? Oh, no, that's not what it is, right? Well, sorry, right? It's political. Full-time remunerated. What does remunerated mean? They get paid. And they get paid well. And they cut all their ties, right? That's the greater autonomy part. Full-time, they're not doing something else, so they're not working someplace else. Now, they could be on there and then go back and work somewhere else again, right? Okay, they don't, career doesn't end or something. But at least they're separate for this period of time. Everybody got the idea? They're well paid, so they're not owing anybody. Huh? Sound good? Okay, so that's nice. Increased independence, right? They're more independent that way too. So more autonomy, more independence, and broader representation. It's not just accountants, okay? We have people from different lines of work. Okay, got the idea? So, need to know that. There's that procedure. I would know that one. These guys, are you getting the idea these PowerPoints might be kind of handy? I mean, you're just reading the book, and this is the book again, but maybe you read the book and you study it, and then when you're getting ready for a quiz or a test, you flip through these and make sure you know every single one of the things on these slides. And if you don't, what could you do? Go read that part of the book again. Huh? Right? Now, everything's not in the slides, don't get me wrong, of course it's not. Oh, the concept. So what's the difference between a concept and a FASB? Okay, this is the Conceptual Framework Project. The problem which was that we had a whole bunch of gaps. Accounting research bulletins, APBs, accounting opinions, right? And then we had FASBs, but they're real disjointed. You know, they don't seem to fit together very well. So the idea is to come up with a conceptual framework whereby when we come up with new pronouncements, we follow this. This has been a really problematic area. Did you get that idea? This is really tough to write a theory of accounting after you're already doing the accounting. Right? You're trying to write a theory for accounting. Okay? Well, you know, it's just what we do, kind of. But it's based on economics, so maybe you could. So, yeah, there's the financial accounting concepts, and then there are updates, right? They're coming out from the FASB, right? Financial Standards Update. But anyway, which ones have substantial authoritative support? The standards, the interpretations, staff positions, APB opinions, the accounting research bulletins, right? So we knew this stuff. Oh, by the way, notice that the CAP, Committee of Accounting Procedure, was part of the AICPA. The APB was a subset of the AICPA. Is the FASB part of the AICPA? No, it's independent. That's the idea of the independence, right? They're independent from the profession. What's the AICPA? American Institute of Certified Public Accountants. It's us. My dad would say it's our union. He's a carpenter. He'd say it's our union. Kind of. Right? Kind of. We all belong to it, right? And we all lobby it. and then it lobbies, right? We all have input, vote stuff, and then it lobbies Congress. Is that the idea? Okay, and state governments and local governments, we protect being a CPA. There are people all the time who want to make being a CPA be similar to being a bookkeeper. Everybody could be one. And they accuse us of restricted trade. No, to some extent, I suppose that's true, right? I don't want people who don't know what they're doing to be signing audit opinions. That's noble. But also, I don't want us to get paid nothing to do audits. Not so noble, huh? Right? But if anybody could do one whether they know what they're doing or not, what would happen? They'd be real cheap and worthless. So anyway, yeah. So that's the AICPA. So the FASB is independent of that, and so is Peekaboo now, Public Company Accounting Oversight Board. But all these things are GAAP, right? But just some things are more important than others. These at the bottom, everything's upside down in this stuff. By the way, the reason they're upside down is that's how they are in the concept statements, right? That's how they are. That's what's out there. So these down here at the bottom are the highest level, and these are the lowest level up at the top. So sort of just have a vague idea of that, general idea of that. If you wanted to categorize them, put them in order, know these three at the bottom for sure. Okay? All right. Can you violate the law and still follow GAAP? That's fine. Read that one. Okay? There's a codification we mentioned, and it's nice. That's a good deal. Here's how the codification works. They think it's a big deal. It's not. GAAP is political environment. This shows all the different groups, huh? Right? This is illustration 1/6 in your book. You know, all the different groups have input to this stuff, to the FASB. So you can imagine working at the FASB would be kind of cool, huh? If you like that sort of thing. So GAAP is as much a product of political action as they are of careful logic or empirical findings. Absolutely. And you'll see some things that don't seem very logical, but if you understand the politics that were going on, when you get in 313 with Richard Schrader and you're looking at leases, unbelievable. You're looking at income taxes, looking at pensions. Pensions is really unbelievable. And it's a political process. Some of it makes sense, some of it is just nuts, right? You guys know about other comprehensive income, right? We talked about other comprehensive income in 101. We're going to do it again, right? But anyway, we'll do it here, and then you'll do it in your next class, probably the one after that. But other comprehensive income is all the stuff that we didn't know what to do with, huh? We don't want to put it on the income statement. But we want to change the balance sheet. It's political compromise. Okay. Don't look so excited. Yeah, read that one too. These are good. Expectations gap we talked about, and yeah, Sarbanes-Oxley, Public Company Accounting Oversight Board. Okay, here's the deal too. Do financial statements really tell you everything? Of course not. It's not going to tell you how talented management is. Not really, although it might be in the income statement to some extent. It's not going to tell you about your human capital, how good your employees are, right? Do you think Microsoft has all of their assets on their balance sheet? They don't own people. They don't own their employees. But what's their biggest asset? Their employees. They're not kidding when they say it, right? Really true. Any company that is selling intellectual knowledge, right? Intellectual capital, it's not on their books. So obviously, Microsoft's worth an awful lot more money than their hard assets. It's the soft assets. That's what they're talking about there. Okay? And, okay, so there's trade-offs too. Timeliness. How fast do you get the information? For decision usefulness, that's the overriding criterion. Oh, everybody listen to that. The overriding criterion is decision usefulness. When you're making a decision of whether or not to disclose something, decision usefulness. How to disclose something, decision usefulness. Whether it's relevant, whether it has faithful representation, decision usefulness. Got it? The overriding thing. We want it to be useful for making decisions. So, timeliness, what does that mean? Do you get it in time to make a decision with it? Understandability, is it understandable to a person who's a reasonably informed financial statement user? It doesn't have to be, my granddaughters who are 5 years old have to understand the financial statements. You're not doing that. It doesn't even have to be somebody who has a college degree in liberal arts and has never looked at a financial statement in their life. No. But if they've had accounting 101, our statements ought to be good enough for them, right? Or they've just bothered to educate themselves a little bit. Right? Read financial statements, looked at them. They should be able to understand it, right? So a reasonably informed user. That's who we're aimed at. We can't possibly be aimed at people who know nothing about accounting and finance. It wouldn't make any sense. Oh, there's a lot of non-financial measurements that are not reported in financial statements. Some are. Forward-looking information, well, it's interesting. This is all historical information that we're, you know, picture, the balance sheet's a picture in time. The income statement is a summary of what happened over a period of time, right? So it's a cash flow statement from the beginning of the year to the end of the year. But here's the deal. People are going to use this information to predict the future. Well, I'm not going to predict the future for you. One, I don't have a crystal ball. Two, if I knew what's going to happen in the future, I wouldn't share it. I'd make investments based on it. I'd get real rich. So it's not about predicting the future for you. It's about giving you information for you to predict the future with. So finance types in here, when you say, well, why don't we use fair values in the financial statements? Which finance people will say a lot, you'll hear that. You got this finance person working, you know? You'll hear somebody say, well, what's wrong with accountants? Why don't they use the fair value and everything? Because we don't know what it is. How much goodwill does young brands have that they've created themselves? I can do it. I know what their stock's selling for. I can take their stock. Look at this. This is really cool. Get it on the board. We're going to do this, in fact, when we do WAC, CAPM, capital asset pricing model, weighted average cost of capital. I know what this is worth. It's the outstanding shares, number of outstanding shares, right? Times the market value per share. Of course, that's changing moment to moment, right, guys? It's a picture at one point in time, but I can find out what it is at the end of their year, right? Close the business at the end of their year, right? I can find out. This is called their market cap. All we'd have to do is make our equity equal to that in financial statements, and we'd have market value. Nothing to it. And then the liabilities, can you value the liabilities? Sure, you take the present value of all those cash flows. Get the present value of your bonds. The bonds are even publicly traded. You could use the public traded value, couldn't you? Right? And then on mortgages and stuff, you could discount it back to now. You could add it all up. So I could get a market value for this, and I could get a market value for this. And then what I could do is I'd say, oh, well, that must be the market value for this. That's pretty much worthless. Everybody knows what this is. What you're trying to do is estimate what it should be. Knowing what it is isn't going to help you estimate what it should be. I want to know if it's going to go up or down. Don't you? When I buy a share of stock, I want to know what's going to happen. If I think it's going to go down, I can place a bet on that. Short the stock. Right? If I think it's going to go up, I can either buy it, right? Or I can place a bet for going up. I can do it. Right? That's the game. That's what we do. Okay? So telling you what it's selling for doesn't help you. Well, then what would we have to do over here? This is art. What assets does it go with? I told you I could come up with the goodwill. What did I say for young brands? Pick a company, right? What do we do? Get market value of their equity, market value of their liabilities, add them up, it's the market value of their assets. Get appraisals for every single asset that they have. That wouldn't cost much, would it? For all their equipment, all their buildings, all their everything, right? Get appraisals. And then revalue those to that level, land, building, equipment, everything, inventory, you got the idea? And then add all that up, and then what's left would be called what, you guys? Well, we haven't identified. What must it be? Goodwill. You tell me how valuable that is. Not at all. How much would it cost? Like the accounting fee, wouldn't you? Be nice, that'd take forever. The appraisal industry would love us. They could appraise every asset in the world every year. What a deal. Ridiculous. You can't use market values because we don't know what they are. Unless we what? My wife and I bought a house for $170,000, I think it was. So over here in the Highlands. We think it might be worth $200,000 if we had it a little 8 years or something. We bought it when the market was really the best. So, you know, it's movable, so it hasn't increased much. So we fixed it up a little bit. So maybe it's worth $200,000. But you know what? On my personal financial statement, what I could do is put it down as $1 million, couldn't I? A little tiny house. It's in the Highlands in the spreadsheet. Get a little tiny place. We could put it on our balance sheet as $1 million. Why not? Nobody knows what it's worth unless I do what? Sell it. What do you think a banker would say if I put it in $1 million? I don't owe any money or crazy now, right? I might put it down at 200 or something, you know, or 190 or whatever. Okay? I don't know what it's worth unless I sell it, do I? Okay, got the idea? So we got measurement issues here. So it's constantly between faithful representation and what? Relevance. Would it be relevant to know the market value of everything? Yeah. Would that be faithful representation of economic reality? Yeah. So sometimes we use fair market value, sometimes we don't. When's an example of when we use fair market value? Give me one. On what? Investments in bonds you might. How about your own bond payable? No, we're going to use discounted, we're going to use amortization, amortized value, amortization of premium or discount. When we originally issued the bond, though, we're using the fair value, that's true. But that's true of every asset. When I buy a piece of equipment, I give the fair value for it. By definition, it's what I pay for it. Where do we do this where the value's changing and we keep changing what's in our balance sheet? How about trading securities? How about available for sale securities, short-term and long-term? Absolutely, because there's a market and we adjust to the market. And that could also be for bonds, right? In short-term investments in bonds, so that's good. Okay, got it? Short-term investment, or, well, anything that's not open security, right? You either be an available for sale security, short-term, long-term, or trading security. How many of you in here think Keith must have just flipped out because he's talking about trading securities available for sale, short-term and long-term? Because I don't know what the hell those are. How many of you really know what they are and know what I'm talking about? One? We're somewhere in between, aren't we? He does because he took 211 already. Cheating.
101.
You did 101. Did you not do 211? Oh, no, you did the IMBA thing, didn't you? Yeah. You ever done this class yet? Oh, you're doing 111, 211 and 212 at the same time.
What is it?
What is it? You're doing 211 now.
Yeah.
Aren't you in another accounting class right now?
But not 212.
Oh, 313? 37? You don't know what you're in. What are
This
you
is
in?
only accounting class I'm doing, I think. I'm doing taxation now.
Oh, taxation. Okay, that's taxation. That's good. How many of you have 2 accounting classes right now? Only 2? Boy, you guys are slackers. Really? Nobody has. Is Deck not doing 215 right now? Yeah, he is. Nobody has 215?
It's offered right now.
You're kidding me. They scheduled it at the same time? Oh, well, it would have been a nice combination. You could do 317 with this, though, couldn't you? You didn't decide not to?
What's 372?
Tax, first tax one. That's what you're doing,
Yeah.
Well, you know what? You're going to do better in here, and then later you're going to pay for it. That's all. It's okay. It doesn't make any difference. It really doesn't. At some point, you have to do 2 accounting classes. Never do 3 at once. Never let anybody suggest you do 3 at once, except for maybe certificate students or crazy people anyway, right? But you don't want to do that. I had a guy once do 4 in a semester. It's hilarious. He's a really bright, really talented guy. He did 4 in a semester. He was a certificate student, coming back and doing it after he had a degree. The next semester he took 1. So he could rest. He was going to do none. I talked him into doing 1. And then he never did that again. That's crazy.
I did 4 last.
You did 4 last? Yeah, but they weren't like this, were they? Yeah, they weren't this bad. Okay, we talked about IFRS. You'll know about that. And we talked about ethics. This is kind of cool, isn't it? We think we're the only economy on earth. Look how big these companies are. We know Walmart's a U.S. company, right? But then Royal Dutch Shell is the Netherlands. Who'd know that they were so big, right? And then BP, of course, is UK, those horrible people that polluted all our water. Yeah, well, anyway. And then look at these Chinese companies. They're probably not that big anymore. I'm joking. Okay, anyway, but, different countries have all kinds of, whatever. Funny, the country of France. Yeah, compared to Conoco and Volkswagen. It's hilarious, isn't it? So, get an idea how big these companies are. So read this stuff and think about it. Right? It's interesting. Useful. Okay. Yeah. Oh, that's kind of interesting. We should mention that. Yeah. Can you believe IFRS is used over 115 countries and we're one of the few that don't? Wow. Us and Russia. That's a good company to keep. But anyway, yeah. And China doesn't either. Okay. So, yeah, anyway, standards used by foreign companies listed in U.S. securities exchanges. You can do either one or both now. I mentioned that before. Types of pronouncements, I guess. That's their pronouncements. So, enough of that. Okay, the convergence project we talked about. How much time do we have left? 3 minutes? That's terrible. So what would I like you to know? Let's do this. About Chapter 2. Pretty obvious. Where's the PowerPoint? No, it's right there. How can it not load? Strange.
It popped up last time we hit OK. If you look on.
Oh, got to get rid of that ink thing. Okay, thank you. All right. So what kind of things do you need to know here? They're going to talk about the conceptual framework here. Oh, a coherent set of rules, huh? Yeah. I want to show you this. This is cool. Yeah, it's in the book. All this stuff is in the book. Everything's in the book. I don't know what I'm for. As you're wondering too. Objective 1 is gone, right? SFA statement of financial accounting concept. Concept statement 1 is now gone. 8 superseded it. Look, 2's gone. 8 superseded it. Look, 3's gone. 6 did. So we still have 5. 6 replaced 3, so we have 5 and 6. We have 7, right? And then we have 8. 1, 2, 3, 4 of them left. Is that right? That's all, isn't it? Yeah. So 4 of the 8 managed to hang in there. Yes, ma'am. It was also superseded, or just eliminated. That's why 4 was not there. Eliminated, or even, it didn't get superseded by something, it just got eliminated. Okay? So these are attempts at coming up with gaps, a way to look at it, but you should follow them. And they're nice attempts too. I don't mean to make fun of them. It's really tough. Okay, the first level, second level, third level, if I asked you for qualitative characteristics or basic objectives, or what are these what are recognition, measurement, disclosure concepts? Could you, I mentioned last time, well, first, we did this again this time. Could you give me this little definition on the objective? Of course, this is upside down, right? Could you write me a little essay about what relevance is, predictive value, confirmatory materiality, or answer multiple choice questions about it? Same thing for faithful representation. I would expect if I asked you to define either one of those, that you use those terms in there and tell me what they were. Does that sound reasonable? It's pretty straightforward. It's there. It's just a lot. It's just a lot. Okay? And you might say, well, geez, he's making us memorize things. I don't want you to memorize it. I want you to know it. And I'm not sure what the difference is at this point in your life, right? Kind of like I'm memorizing these key terms, and then I'm trying to make it make sense, and I'm trying to write it down so that it makes sense and I can communicate, right? So view it that way. So bear with me on this. When we get in chapter 4 and 5, it's going to be awful like this too. Although we're doing balance sheets and income statements and cash flow statements, but still it's going to be in a lot of depth. The rest of the course is going to be number crunching, okay? You'll be okay. You can survive this. But you got to know what's in a financial statement, right? And why it's there, and where it comes from, and all that kind of stuff. So we'll be talking about this all as we go through the course, okay? We're going to be doing a lot of this stuff. So, word. For crying out loud, bring your book to class. Jeez. Can't believe you guys want to leave early. I did 2 hours of review today for my principal students. The problem is there won't be any. Oh, Richard Schrader might have an answer for that. Or Alan Deck. See if he has the answer. It'd be nice that when you work the problem. Either that or we can get problems, copy problems out of other people's books and work those. That makes sense? The answers are online, not match yours. Match these. You're welcome to borrow mine and run a copy myself. Anything. Okay, sound good. Good to see you. Good. What's up? What are you doing? Just be here when you can. You know that. Let's not get too carried away. Yeah.
Just want to introduce myself. Brian.
Hi, Brian.
Looking forward to your class.
You had Alan, probably? No, I did.
I took it from Syracuse. So I'm the one who took it
Oh,
from Syracuse.
Syracuse.
Yeah.
Okay.
So it definitely was not as rigorous.
And that was in high school you took it, sir?
Yeah. Right.
Okay.
Yeah.
Chapter 3 is what's going to kill you.
All right.
Okay, you just really go after it.
All right.
Okay, as soon as we get done with this quiz, you just pound on it, make sure you make it to the review sessions.
Yeah,
And look at the review sessions I have online, and
Right.
you're welcome to, come to the principal's class if you want, whatever you need to do.
Alright,
Whatever you need to do.
Thank you very much.
And then if you do horrible on it, you do. If you do horrible on the, first, that chapter 3 quiz, don't worry about it. We're gonna cover everything anyway.
Did you say that principals meets here Monday, Wednesday, Friday?
Monday, Wednesday, Friday at noon and at 1.
And
Yep.
two of them back to back.
Yeah. You're welcome to either one. And we can figure out some way, maybe talk to David Collins about getting you on access to Moodle. That's one thing I don't like about Moodle.
Yeah.
I used to put them out, on Outlook myself, over, so anybody could get it that wanted it. But Moodle won't let you in unless you're in the class.
When I first started back and saw it, I was like, what's this? I was like, okay, this is kind of like the new Blackboard.
Yeah, it's the new Blackboard. In some ways it's better, some ways it's not. Kind of like everything else. I don't know if anybody would ever listen to this again, but if it recorded it, I'll put it out there. You never know.
Probably.